Hello, everybody, and welcome. This is our next series for financial accounting, and this is adjusting journal entries. This is part one. Why do we need to adjust our accounts? So when we get to the end of the period, which is generally for my class, it's going to be December 31st or whatever the period might be, we have to look at every single account balance. For the assets, do those assets reflect their future economic benefit? Meaning that for example, if we have equipment, have we used that equipment? Do they reflect their future economic benefit? Do our liabilities reflect our future obligations? If we got an advance from a customer and we've done some of that work, is that liability still correct? Do our expenses reflect what was used during the accounting period? For example, if we bought an insurance policy, debit prepaid insurance, credit cash, and if we've used some of that policy, do we now need to go through and reflect the use through recording an expense? Lastly, do our revenues reflect what was earned during the accounting period? So if we received money in advance and we started performing that work, we more than likely need to go through and record revenue. So what we're going to do is we're going to go through and make our unadjusted trial balance. We're going to record the transactions, and then we're going to be asking ourselves these questions. Do our assets reflect their future economic benefit? Do our liabilities reflect our future obligations? Do our expenses reflect what we used during the accounting period? And do our revenues reflect what was earned during the accounting period? Note with revenues, the definition is a little bit more complicated, but just kind of think about it as, have I done the work that I'm supposed to be doing? Therefore, I can record the revenue. When we get to intermediate accounting, we'll be talking about the fun 5-step process. Now, the big rule here is when we're doing adjusting journal entries, we never adjust cash. We're just going through, we're adjusting our expenses, our revenues, our assets, liabilities, but we are never going to go through and adjust cash. It doesn't need adjustment. Rather, what we're really doing is saying, are the revenues or expenses, are those correct? By doing that, we're not automatically going to be creating cash out of the thin air, although that would be very nice. But when we're going through and creating adjusting journal entries, we're never going to adjust cash. So those are the general rules for recording adjusting journal entries. I'll be back momentarily with our next video talking about the process we're going to be going through this particular unit. So I want to thank you. Please feel free to leave any kind of questions you might have below. Appreciate your liking and subscribing. And I look forward to seeing you on the next video.